Welcome back to 7-Minute Options. Taking a look at my position in GLD, which got hammered today after the Fed announcement, and checking in on DKNG and some other positions that we opened up recently. All right, so let's start right off with gold. So back, let's see, 2 weeks ago, 14 days ago, here we go. We opened this wide iron condor, right? This iron condor is 10 points wide. So the short strikes are at 185 on the call side, 167 on the put side. The wings are $10 wide, collected just over $100 in premium, and hoping to close it for 49. And of course, this position got hammered after that Fed announcement yesterday. After the closing bell, you can see this morning gold opened up quite lower than where it closed yesterday. So it's a big gap down. That's probably the biggest gap that we've seen in a few months. You know, maybe we have to go back to March when we saw a similar kind of gap, but a huge gap down. And since it opened this morning, it actually went a little bit lower. Now, this line here represents my short strike on the put side, which is 167. So right now, gold is at 166. I'm just above my break even, so I'm doing okay, but definitely not happy with this position. So just to take a quick look at it, if my position here is, let's say right now it's 60 cents below my short strike, and I got just above $100 for it. So my break even is something like 165.95. So I'm above my break even, but my break even is definitely being challenged. What I think is happening here right now is, yeah, there's definitely a bit of panic here with gold. It gapped down, but I think right now as the market is digesting this news, I do expect this to pull back. And if this can pull back in the next few days, we're going to be okay. In the meantime, what I am going to do is I'm going to reset my calls here. So my calls right now are way out of the money. So if I take a look at my gold position here, on the call side, right now my short put is at the 3 delta. So I'm going to close my, I can close my $10 wide spread on the call side for $7, which is great. And I can establish here the 20 delta level. So if I go to the 173 to the 183, maintaining my $10 wide risk here, I can pick up 52 in credit. If I go to the 172, 182, that's still just outside the expected move here in the 23 deltas, I can pick up 67 in credit. So I'm making my iron condor a little bit narrower, but I still have that flat spot. So by making it narrower, I pick up some credit now, but the overall position right now, I'm going to have to keep it up longer. So if this does start moving back up toward this 169, 170 range, it is going to the entire position is going to be decaying a little bit slower, because this call position is going to start losing value a little bit more slowly than if it were way out of the money. But there isn't a whole lot of value left to lose. I mean, I only have $7 here at the $3, 3 delta, 1 delta range. So here I can at least help myself a little bit, although I do expect to hold it a bit longer. 172 doesn't look that great on this graph. So just to show you right where that is right now, I mean, just yesterday, it was at the 172 range before this Fed announcement. So maybe give myself a little bit more room with the 173. Let's try that. So that's what I'm going to do. The 173, 183, I can pick up 52 in credit. I can actually start narrowing this iron condor and limiting my upside risk. So if I go to the 182, now I only have $9 of upside risk. I even get a little bit of buying power back. But yeah, I'll take 50 credit. I'll see how much, if this pulls back to the 169, 170 range over the next few days, then maybe I can start closing this out. Because remember, the idea here is I manage it here with 29 days left to go, and I'll be looking to close this position with about 15 to 20 days to go. And it is getting challenged. So if this pulls back, I'm hoping to close this out for a scratch or maybe even a small gain. So let's see if that gets filled for 50. Oh, and of course, I already have a position open. I always do this because I have my GTC order right there. All right, got to close the GTC order. So now I can route a new trade for it. And if we look, oh, it's still in there. Perfect. 173, 182. Let's see if that gets filled for 50 credits. So I'm going to keep that on for a few minutes, see if that gets filled. Some of the other positions here, we opened yesterday this great position in DKNG just before the closing bell yesterday. Here we go. And as we can see it now, in just one day, if I look at DraftKings, you can see the volatility just really starting to come down and starting to come down quick. And what that means is we're lucky it moved sideways and moved a little bit up. So typically when things move up, the volatility spikes. Volatility comes down. And if we're going sideways, it comes down. And this was a historically high volatility. It's coming down. So that's looking good. And you can see here in one day, this position went $40 in our favor. So we opened it for 194 yesterday. We could close out for 154 today for a net gain of 40, minus the $3 in transaction costs. And so that's always a good question. I mean, if you can make 20% in one day, that is a 20% move in your favor. Should you close it out in one day? And that's a never-ending discussion. The idea is if you always close out your winners quickly and you let your losers run, then overall, maybe you're not going to be that profitable of a trader. If you got a good position, let it run. My goal here is to, you can see here, is to get another $30, $40 out of this position. Right now it's at 155. I want to close out for $1.20. I'm not going to close it out today. Although, I might be okay. I mean, there's nothing wrong with 20% in one day, but I really want to push this a bit further. If I close all my winning positions early, then in the long run, I'm probably not going to be as successful of a trader. So I'm going to let this one run. Hopefully it's going to get down to the 120 level in the next 4 or 5 days, maybe a week, and then I'll close it out for my target gain. So that's doing okay. Gold is not filling at 50. Come on, GLD. I don't want to go much lower on this. I'll squeeze it. Okay, I'll go back to 149 is the max I'm going to take. I'm not going to go any lower. If I don't get 49 or 54, there's no position. There's no point doing that. Maybe I'll just wait. Hopefully gold turns around. And maybe I don't need to touch the call spread. All right, what else we looked at here? Let's see, ADBE. It's interesting with Adobe here. Adobe hasn't had earnings yet. We opened this 2 days ago, and the earnings announcement is after the bell today. So normally these positions don't really move much. Usually when you got a day or two before earnings, it doesn't move much. And for some reason, Adobe has already moved $47 in our favor. Usually the IV stays very high just before earnings, but for some reason, the IV is starting to come down a little bit. Adobe, even though it's a big move up today, it's still a bit of a sideways move in the last 2 days. And yeah, this is very surprising that it has moved $47 in my favor. Now I'm asking myself, should I just take my $47 gain and not go through the earnings announcement? Adobe has been really acting a bit strange lately. It had a big swing yesterday. Between its high yesterday of around 553 and its low around 538. I mean, that is like a 17-point move yesterday. And today it's gone from, opening at 540 to now where it's at 550. So that's a 10-point move today. It's kind of bouncing around, even though typically it doesn't bounce around. It shouldn't bounce around that much just before earnings. So earnings are coming out today after the closing bell. So now it's a good question. You know what? Like, again, this is a defined risk trade for me here, right? If I look here, the risk is defined on both sides. I'm only taking a $500 risk. If I get a big move to the downside or a big move to the upside with Adobe, maybe I don't want to take that risk. I mean, I'm way outside the expected move here on the downside. That's a great question. I was just saying a second ago how, you got to let it run. Don't take your wins early. My goal here is to take another $60, $65 here. That was my initial plan for this earnings trade. If I look at the volatility, it's down at 36% for the June 25th expiry. That's where I have my options open. And I expect it to go down to the 29.30 level after. If this wasn't earnings, I would keep it open. If it's earnings, there's definitely going to be a volatility crush. It's just kind of strange how it had a big move down and a big move up. You know what? I'm going to let it ride. I'm going to keep it open. It's a tough one. I'm going to keep it open. Yeah, there's another 50, $60 I'm hoping to get here. And yeah, let's see where this goes. Hopefully, if it does what it's doing now, it just bounces around. Maybe there's a bit of a big announcement and a big move up or down, but hopefully it'll come back and clear my short strikes. I do expect the volatility to come down to like the 30% range. Not the IV, of course, just the regular IV, not the IVR. The IVR is just low as it always is. but it's the IV that I'm talking about. I'll go from 36 to 30. I think I can squeeze a little bit more money out of it. I'm going to take the risk through earnings. I'm going to let this one run. And really, I don't have a lot of defensive options here if this really moves against me. So I'm just going to roll my dice here. And yeah, I'm going to let this one run, see where that ends up. Other than that, we're doing okay today. Nothing else is really giving me pause. Everything else seems to be moving in our favor. Silver, yeah, this one is just pain in the butt here. We sold the 24 put, and yeah, that's being tested. It's only 11 cents away from my short put here, but we have 64 days, so I'm not too worried about that one. That's a precious metal. I think it's probably being affected by the same move as gold. You can see a big gap down. Thanks, J Pow. Screwed up my both silver and gold positions there with your announcement yesterday. But who am I kidding? That's probably why the IV was good. The IV was high and the premium was juicy, precisely because we got some crazy inflation fears in the market. Anyway, that's my quick 7-minute take today. So let's see where gold ends up in the next few days. You know what? If I didn't get filled on this, if I don't get filled on this thing in the next 45 minutes before market closes, you know what? I'll see where gold ends up tomorrow, and I'll try to take my chance again. I'm not gonna just do this for even low. I need some good money here to do this. So if nobody buys this, then I'll see what happens tomorrow, and maybe I'll try it again. I'll keep this open, see if this gets rolled down. If not, then I'll take my chances and wait for gold to turn around and not touch the call spread. So that's it. Thanks very much.